good morning, everybody. Happy Monday. Welcome to the Hit and Run Candlesticks trading room on this, what is it, June 6, 2022. How's everybody doing? Good morning, Gavin, Greg, Gregor, Mike, Thomas, John, Fred, Mark, Al. How's it going, Mike? Everybody doing good? Everyone have a great weekend. Good morning, Ron. How are you? Bulls look like they're a little bullish here. A little bit. Hello, Mike. Hello, Mike. Bulls look like they're a little bullish here. I talked to a couple of people this weekend, and just kind of chatting with them, and I was actually out fishing, and had plans to talk to a couple of people. So thank goodness for ear pods and hands-free talking. And there's this big battle going on with most people, I think. And the battle is the possibility of the market going down. Whoops, wrong one. Possibility of the market going down because of inflation, because of recession. Make up anything you want, it doesn't matter, because the market's that's what people are worried about. But yet here we are in a relief rally. And I think most people are respecting the fact this is just a relief rally until proven different. But I think what happens, what I've learned by talking to two different people this weekend, was this tug of war in themselves, this battle between going down and going up, going down and going up, down and up, down and up. You know, afraid to invest because the floor could fall out anytime, and it could. Afraid to not invest because you don't want to miss out of making money in the stock market, and that's what we're here for, right? Look, here's a simple thing. One, don't trade as big as positions as you were 2 years ago, maybe, or a year ago, or whenever. You can make as much or more money trading a little bit smaller positions and maybe not as few as positions. Believe me, you can, because it's not about throwing mud against the wall and seeing what sticks. It's about picking good quality charts and good entries in charts that are going the direction you want them to go. So here's a simple thing. Here is something so simple, and take this back. I'm going to take this back to what really years ago was the turning point in my trading. The point of give it up or make it work, because I couldn't keep going the way I was going. You can't lose that much money day in and day out and keep trading. Here's the one thing, and that's the T-line. What is price doing in relationship to the T-line? That's all you got to know. If you are a swing trader, let me get rid of this right here. Well, if you're a trader here, let's just, we'll take that off, I guess. Just look at the T-line. That's all you got to look at. And here's, if you don't believe me, don't trade squat today. Not one single thing. Spend all day just looking at this chart. That's all you got to do. And you will learn so much from this chart right here. For instance, here we closed over the T-line and you had follow through. That's a trade until it's not. When is it not? When we close back below the T-line. Very simple. You want to short something, you short it when we close below the T-line. We close back above the T-line, you're out. That's simple. We're back in on a short, made money right here. You're back out of that short. That's all you have to do. Just trade the T-line. Now, here's what I would do. If you're trading long, whatever chart you're trading long, let's look at NVIDIA as an example, because that's one of them on the watch list today. So NVIDIA is long. NVIDIA is a buy. As long as the market agrees, which it does, price is above the T-line, it's a no-brainer. Trade the direction of price and the T-line. That's all you have to do. Two people I talked with this weekend, totally separate people. We ended up talking about this because I pushed the conversation this way. But their frustrations, fear of something bad happening is warranted. But the simple thing is, don't invest every dime you have every single day. That's number one. And number two, the reality is, if the market starts turning bad and we're going to go down, and this is I hear this from people a lot. You know, what if we wake up one morning and the market does this and I don't have time to get out of anything? The reality is, anybody that's been trading here for 30 years, how many times has this happened? Really? You know, take this off your plate. It doesn't happen as much as the fear builds on it. There's so much fear that something like that is going to happen, and that is so, I think, unlikely. Now, I mean, we could have maybe, you know, a little gap down, but nothing like this. It just stop and think. Anybody that has been in the market long enough, you just stop and think, how many times has that truly happened? And were you really hurt? The reality is, you know, did your account literally get destroyed? And it doesn't work that way. I mean, it's just not like that. So here's a simple thing. What is the chart you're looking at? I said NVIDIA. I'm going to go back to this chart here. There we go. NVIDIA is a buy here. NVIDIA's got a great bottom. It's looking good. We're above the T-line, above about 192. I'm looking at 223.25. If it goes higher, great, trade it that way. But this is what I'm looking for right now. As long as the market, my market is the SPY, can hold over the T-line, why not trade that trade? That's going to be my attitude. Let's take a look at TAN. Now, TAN has run up a bit much this morning from when I first was looking at it. I think TAN gets up to about 88.30. I do not believe this is the buy on TAN. I believe the thing to do is now patiently wait for it to pull back. And if it doesn't pull back, step aside. Let it rock and roll. It's not for you if it doesn't pull back and set up. Another one is XBI. Look at XBI now. Here we're starting to show positive trading. We're breaking out over this resistance area. I'm just going to move this up to the 50-period moving average. 78.25 up here. As long as the SPY or the Qs or the diamonds, whichever trips your trigger, okay? I don't believe, you know, whether you watch the SPY or the diamonds or the Qs. I think IWM is sort of a weird one right now. But if you watch diamonds, the Qs, or the SPY, then if that's your game. If you watch all three of them, that's fine too. As long as price is showing positive trading above the T-line. And by the way, what is positive trading? What is it? Let's see here. Is that positive trading? Yes, it is. Is this positive trading? Yes, it is. How about this? Is that positive trading? It is when it's posed as above the T-line. That's positive trading. It's above the T-line. That's all we need. Nothing else. Nothing else. We get below the T-line. That's a different game, though. Again, if you don't believe me, don't trade today. Spend your time looking at the charts. Spend your time looking at the charts. Why is that green line there? Oh, there it is. There we go. Just look at the charts. Above the T-line, positive trading, trade. Below the T-line, positive trading down, trade. Very simple. Here's another one. EXEP, I like what that's looking like. Above 134.90, we should see 146.30 something. And then from there, perhaps that 50 period moving average. But we're going to have to get through this 146.30 area. Again, above the T line. Does this mean you have to wait till we get above 130? Well, let's just call it 135. No, we're above the T line, right? Because if it goes below the T line, we're going to question that trade. You're going to look at it and be sure you want to be in it. Great little risk reward here. Nice bottom. Good target profit zone. Chewy. Look at Chewy here. We think we can get up here to that 50 period moving average? Why not? I think so. Here we've broken out of this resistance area here. You've got a nice bull kicker right in here. Good consolidation last week, and we're showing a bullish candle today. We're above the T line. Why not? The SPY is showing positive trading, so we're trading with the market right now. AMD, look at AMD here. Do we think AMD can get to 118.90? Why can't it? Why can't it? I know people that swore up and down AMD would never even get to the 50 period moving average. Why? Because they're so freaking bearish in the market. Look, I'm bearish too. I think the market is yet to go down. But it's time to stop worrying about it. It's time to start following the charts. When it happens, it happens. When it does, it does. You can't control it. I can't control it. Mike can't control it. So trade what's in front of us. Price and the T-line. I got to tell you, that is the most easiest, simplest thing in the world. And it never lies to you. Not ever does it lie to you. When price is above, you're bullish. When price is below, you're bearish, which you want to see what the overall trend is doing as well. And then what is the market doing? If the market is moving down and you're trying to trade this long, well, you deserve to get smacked around a little bit because you shouldn't be doing that. Pretty simple. So I don't know why this is really right here. Above 109.40. Right in here, that's pretty much above the dotted deuce. Watch for 113.45, then 118.90. Netflix. Take a look at Netflix. Can we get to the 50 period moving average? I think we can. As long as the market works, then we're going to move up. That's what I see. So as long as the market again that I look at is SPY, F and GU, Qs would be second. Price above the T-line. And it looks to me like, by the way, we're headed to the 50 period moving average here. After that, everything is a reevaluate at that level. So as long as we're still headed that direction, I'm going to look at Netflix as a buy, and I'll trade Netflix accordingly based on price action and above the T-line right here. EQT. Anybody think it could get to 64? Sure, I do. As long as energy stays strong, it's going to get there. Here we are above the T-line, and here we are close to the T-line. I like that. Risk reward is pretty decent right there. And once again, as long as the market remains bullish above the T-line. It is so simple. It really, really is. Man, I need to go fishing more often, clear my head. It just talked to a couple guys, and man, CVX. CVX, how about 230 up here on CVX? So right now, I think we're going to need to break out above 180.25, but that doesn't mean that it can't be bought right here, because if it's bought right in here and we close below the T-line, what are you going to do? You're going to close it out. Now, let's stop and think about this, since this is the last one I have. Let's stop and think about it. By the way, if you can come up with some sort of a program that you can draw on your chart, I use Camtasia. Camtasia, it's kind of expensive. I say expensive, I don't know, maybe $250 to buy it. If you never use the recorder, though, that it does have some pretty good drawing tools. There are limitations. because once I draw on this, I can't do anything with it. Another thing is maybe you snag it. Maybe you snag it. That's a program, and I'm sure there's hundreds of other programs. But when you look at this chart, try drawing on it, because if we went from where we are on this candle and we closed below the T line, how does that chart look like to you? This will work out 99.9% of the time. Are you really going to want this chart? And what difference does it make if it doesn't do it here, but it does it, say 3 days from now, we get below there? Draw on the chart, because now what you can do is you can start connecting dots, and you'll start seeing things. I know that do something like that. That's really what happened. So it took 1, 2, 3, 4 days to do it. So what? Draw it in. How do you feel about that chart? Not so good. So just trade what price is doing in relationship to the T line. Always take a look at the market and what is the market doing? Is the trade you're trading doing what the market is doing, or are you going against the market? In which case, look, I love you all, but you deserve to get what you get. You know, if you're gonna put your hand in the bee's nest, be expected to get stung. So go with the flow. Go with the flow. Anyway, good morning again, everybody. Thank you for being here. I do appreciate it. Well, there was one more thing. Now, I'll think about it later today, I'm sure. All right, you guys take care. We'll see you all back here in about, 22 minutes, okay? Thanks a lot.